footprint chart perspective, you can begin to see how the aggressive sellers have failed. This tells us that the fair value gap is strong and we should be looking for buys. We also get extra confirmation over here as well. This is the second entry you could have taken. Let's take a look at this. Aggressive sellers into the zone, aggressive sellers into the zone, and they were met by aggressive buyers. So when we see tons of aggressive selling down here, we see 20 for 0. So there were 20 aggressive sellers with no reward. This means that the buyers are very much in control, and that's something you see, and that's something that's reflected by the footprint charts. So your first entry could have been the first break above the level. That was a good entry. Now the second entry, which is what we get over here, price does come in, but price breaks to the upside. So we see two large buying candles after aggressive selling has failed, and that's exactly what we see over here. It's the same candles over here. Aggressive selling is not being rewarded. Now, if we understand things one more time in terms of the buyers and sellers, let's quickly clear up the chart a little bit. As price comes into this area, right? As price comes into this area, it left a 5-minute imbalance, right? This is the 5-minute imbalance over here. This right here is a 5-minute inefficiency or a 5-minute imbalance. We are looking at price in this area. So if we just continue to play price on, we see a break above this area and we're looking now for a retest. So price comes into this area before breaking higher. So I want traders to understand one thing, all right? When you see price action like this, right? When you see a large wick over here, when you see a large wick like this, we are going to be dissecting and understanding what this means, right? You are all going to walk away understanding what this candle actually means. Now, this candle was represented here, right? This candle was represented here. Pay attention to this candle. I want traders to understand how interesting this is, right? This candle over here. First of all, we had a 0 at the bottom. What does a 0 represent, right? I was answering some Instagram DMs about this, right? So, but a 0 on the bid, right? Bid and ask. A 0 on the bid represents that there's 4 aggressive sellers in this case and no aggressive buyers. So think about this. If there's no aggressive buyers, but the market moves up, this tells us that the buyers have to be in control. Because if there's no aggressive buyers hitting the ask and the market still goes up, this means that there's a ton of passive buyers sitting there. And this is the difference. When you see a fair value gap, you're looking for more passive buyers for a bullish fair value gap. You're looking for more passive buyers than aggressive sellers. If you can understand this, you will be a profitable trader. There's nothing holding you back. It's about understanding the order flow and how to read it with fair value gaps. This is the most important thing. And the other interesting thing is, yes, we've had a red candle over here with a massive wick, but this wick was full of aggressive buyers. You can see there was more aggressive buyers than there were aggressive sellers. And you can see that via the color-coded delta. So when we head back to the regular candlestick chart, which is what we're all familiar with, right? This here was a fantastic entry you could have taken, right? You want to have your stop loss just below the wick, and you want to be targeting the highs, right? So you understand we have a trend line liquidity forming over here. You want to be targeting the highs over here. That's a 1 to 2 hour trade, right? Just from over here, 1 to 2.5, depending on how you managed it. Now this trade, of course, rallied to the upside with huge R multiples. But the main thing I want traders to understand is that there were more aggressive sellers than there were aggressive buyers. And that is the reason why price moved up. It is not power of 3. It is not for liquidity or time or anything like that. It is the fact that there's more aggressive sellers than aggressive buyers at a fair value gap, which means that passive buyers are stepping in to drive price higher. So when there's more aggressive sellers than aggressive buyers and the market fails to move down, this tells us that there's passive participants, there's passive buyers that are present, willing to move price higher. And that is that's kind of the backbone of order flow. That's kind of the backbone of how I trade, right? Nothing held back. So again, if you are interested in order flow and ICT, I've got a free guide, a free checklist. So comment the word checklist in the comments and I'll be more than happy to forward that to you. I'm also offering free one-to-one sessions within price action